Hey, what's up, all of you beautiful subscribers? So we are seeing some danger signs in the stock market. We're going to talk about that today. We're also going to talk about some tech news, like Google and Amazon announced two very cool things. We're going to talk about Tesla and Facebook. Their earnings reports are coming out today. We're going to talk about some personal finance stuff, maybe, some Virgin Group ones, and, a bunch of stuff today. And yes, my throat is sore, so my apologies for that. Anyways, let's jump right into this here. Market optimism hits Black Monday level peak, a potential significant danger. Okay, so CNBC, they like to send out a weekly survey. I guess it's not even CNBC that does this, but a survey goes out to investors, and they like to measure the confidence of investors, so how many people are bullish and how many people are bearish, okay? And so 63.5% of investors right now are bullish, and 14.4% are bearish, and then there's a few neutrals in there. And so usually when this spread is 30 points or more, there's a sign of elevated risk, and when there's a difference of 40 points or more, usually it's a sign that you should take some sort of defensive measure. Now currently, that point difference is 50, meaning that it is beyond taking defensive measures in the stock market. And so this article goes on to say here how this year is following a very similar trend to what happened in 1987. People at the end of 2016, they kind of started investing in the stock market again, and then it kind of plateaued for about a month, and it kept going up and up again, and consumer confidence is at high, and everything's going up, and there hasn't been a crash in a long time. And this is the similar trend to what happened in 1987. Now people are more confident now more than ever. And don't forget, here's what happened in 1987, by the way, was that this wasn't just a slow stock market crash over the course of a few weeks or a month or so, like happened in 2008. In 1987, it was a one-day crash where the market collapsed 22%. All right, and so in terms of investor behavior, it's very similar to what's going on from what happened in 1987. So this next crash that's going to happen by the end of next year, that's what I think. Might happen earlier than that. This crash might mimic 1987 more than it's going to mimic 2008, which is really interesting. It might mimic more of a 1987 or even a tech bubble crash than it's going to for the 2008 complete economic crash of the real estate market and the stock market and everything. So what do you guys think of this? Let me know in the comments down below. And again, this is how bubbles form, when people are very confident in whatever they're investing in. If it's real estate, if it's gold, if it's tulips, if it's the stock market, when confidence is at an all-time high, that's usually when the peak of the market is reached. And then usually there's some sort of downturn that follows. So I just want you guys to keep an eye on this, because this could be happening sooner rather than later. We could see giant one-day sell-offs coming up in the next few weeks here. So keep an eye out for that. And just, my recommendation right now to everyone investing is just, if you want to invest $10,000, maybe you have 20 grand in the bank, you want to invest 10,000 of it somewhere, maybe don't invest 10,000, maybe put 5 grand into the market just in case something happens, and just always invest for the long term right now. Don't be a swing trader, don't be a day trader. Right now is a very bad time for that. You're going to end up like remember the Wolf of Wall Street? Remember the Wolf of Wall Street where in 1987 he was talking about how it was the worst day of his life. Essentially the market crashed, and then after that he had to kind of start a new business, right? Yeah, that's what happened, right? 1987, he was working as a stockbroker for that big company, and then they fired everyone because the stock market crashed. Then he went to go work at the penny stock company, right? So don't be that guy. And don't trade penny stocks either. Okay, let's move on to the next topic here. I want to talk about some tech here, then we'll jump back into business. So I want to talk about this Google thing here. So Google launches Poly, a home for the world's 3D objects built for creators. So this is just something really cool in terms of business. Like, who really knows the applications for this? I'm guessing it'll help out with people wanting to build 3D games, people wanting to build augmented reality stuff, apps, games, and so on. But why I think this is cool, because I'm just going to show you guys. So if you're listening in podcast form, pretty much what Poly is it's a kind of like a marketplace for people that want to make 3D stuff. So if you want to put a burger into your game, you can go to Google Poly and download the burger object and put it into your game. And it's just simple as downloading and then putting it in there. And if you want to make it move and stuff, you have to do that yourself, but you get the model done, okay? So let's jump into Google Poly here. I just want to show you something really cool here. Let's show you guys, let's see if there's a Starry Night. Okay, I'm going to show you guys this. Click on, and I'll leave a link down below, Google Poly. Wow, this is absolutely, like, look at this. It's a 3D animation of Starry Night, of Van Gogh's Starry Night, and you can control it. You can go around, you can zoom in and out on it, and this is something that you can put into a game, and it's already pre-made. And now, perspective. If I were to make this, and I used to be really good at animations and doing these kinds of things, if I were to have made this myself, it would probably take me about a week to do this, or more, maybe even a month. And so the fact that you can go in here and just download it and it's done, I mean, that's kind of crazy. So it's not just for that, it's for character. Oh, I just clicked on something random. It's for characters, it's for objects. It's like you can put an eagle in there. Someone uploaded, I guess, themselves, or some person named Scott, so you can put the Scott character in your game. You can put, wow, this is a cool Wonder Woman painting here. Anyways, I won't go on this too much here, but if you're, because it's in podcast form, you're like, what am I seeing? Just go on to Google Poly, and you'll kind of see how amazing this stuff is. Look at this. It's a 3D work of art marketplace. That's what it is, and this is absolutely stunning here. So go check that out for yourself. The applications for this, I mean, I see it as selling this kind of stuff, it's like a marketplace for creators who want to upload 3D objects. Like for me, I've actually made 3D objects and uploaded them for free onto some sites. And now the fact that you can actually get paid for that is really, really cool. So it's going to be like a Google marketplace for people that want to make video games and animations and things along those lines in apps. So really, really cool. Go check that out. Some cool stuff on there. I want to move on to something kind of tied into this, is actually Shoppable. So Shoppable is this it's this new tech startup. They just got $1.4 million in funding. So Shoppable video startup. So Cinematique, sorry. Excuse me. Yeah, Shoppable, obviously. Notice they've actually, how long's Shoppable been around actually? I like to look this stuff up. Shoppable. How long have they been around here for? Do they have a Wikipedia? I feel like they're like a several $100 million company, somewhat similar to Shopify. Maybe they're not big enough yet. Anyways, Shoppable, they have this startup called Cinematique. And why is this cool? Well, it's because you can have a video player online where you get to click on an object that you see in a video, and it will find that object for you. So you can either A, buy it, B, just look at it, C, find out what it is, and things like that. So I'll give you the test here. Let's play this clip from whatever this is, whatever this test video is. I want to click on this. Here's Stella.
There's music, dance, costume. There's so many different aspects of.
Oh, that's weird. It was working a second ago. Maybe it's because I rewound it.
There's music, dance, costume. There's so many different aspects of hosting. My goal is for guests to feel completely transported. You have to really create an environment where they're walking through the doors and they're someplace else, someplace they've never been before.
And so, really cool stuff, and it kind of adds it to your cart. It's a really interesting idea. I would be a fan of using this for myself, because when I'm again, I say this all the time, I'm getting closer and closer every day to launching my website to you guys and telling you guys about it. But I'm going to be probably putting some products in my videos just for like a quick 10-second, like whatever product of the day kind of deal. And the fact that instead of having to leave a link in the description, you guys can just click on it. I mean, that's pretty cool. It's a really cool idea. So Shoppable, it's kind of like live annotations, except remember annotations on YouTube? Oh, those things pissed me off. It's like that, except it identifies the object for you, I guess. And yeah, anyway, some cool stuff, some cool technology there. I'll look into using this if they take off here. Let's go on to Amazon here. So Amazon, again, some more AR stuff. Again, this is very tech heavy to begin with. My apologies for all of you business people out there. But there's a lot of tech news going on today. So Amazon adds an augmented reality shopping feature to its iOS app. Wow. So this could be really, really cool, meaning that you can, if you are buying, I don't know, like the example here is a vase or a vase, whatever you want to say, for flowers, okay? So you go on the Amazon store, you see a nice vase, you click on it, and you want to know how it would fit in your space on your table that's right next to you. So what you do is you click on it, you save it, you open up the Amazon app, and you can essentially see what it looks like on your desk live through your iPhone or through your Google phone using the Amazon app. And this could be really big. I mean, there's a lot of companies out there doing this. I know Google's done stuff like this. There's a bunch of startups that have tried to do stuff like this. And the fact that the #1 marketplace, online marketplace in the world is doing this, this could be really, really big. This could be a really big side thing. I mean, picture this. I mean, today or yesterday, I was thinking about, you know, if a fitness, I don't know, like a squat stand, I guess, like if a fitness station would fit in this room that I'm in right now, and I don't have measuring tape in here right now, and I was just kind of curious what it would look like. Would it fit? And this app would kind of solve that issue for me. It would take the proper dimensions. It would take the proper dimensions of the room and the fitness thing, and you know, I could go to the store or order it online without even having to measure the room. In a sense, I guess. I don't know. I don't know how it would work specifically. That's just kind of all. It really depends on the app. I don't know too much about the app here, but you know, stuff like that, like I could see myself using this. I don't know if you guys could. So let me know in the comments below what you guys think about this, and if you would actually use it. I think I would. I probably would. Let's move on to the next thing I want to talk about. Let's talk about these smart earbuds here. So Doppler Labs. I remember I got really pumped about these earphones a little bit. Not like too pumped, because I was actually thinking of Waverly Labs, one that translates live speech into your own language for you. But these were kind of cool too. So Doppler Labs, they raised more than $50 million in funding, and they just announced that they're done today. They're shutting down, and they sent a note out to everyone. They only sold 25,000 of these things here, and this is another thing of where a company went out, raised a bunch of money, raised expenses to the point where it's not sustainable if they don't sell hundreds of thousands or millions of these things, and the company goes bankrupt in just a few years. So that's very unfortunate, but it's a sign to all of you entrepreneurs out there. You shouldn't be building a company and just raising your expenses without actually having the money to support it in the long run. Yeah, sure. There's always billion-dollar companies that are made like that all the time. Like, what's raised funding? Facebook's raised funding. Tesla's raised funding, right? But more often than not, about 90 to 95% of those that raise millions of dollars in funding go bankrupt within 5 to 10 years. So, and this is just another one of those examples. Doppler Labs going bankrupt, and yeah, all the investors lost all their money too. So that's very unfortunate. Let's move on here to another Google thing I want to talk about here. Google will pull its QPX Express API in April 2018, cutting off its airfare feed. So what does this mean? What does that mumbo jumbo mean? So what Google does for a lot of their stuff is there's this thing called API, pretty much meaning that like if you want to put Google Maps on your website, for example, what you do is you would go grab the Google Maps API and then put it on your site. And Google does it kind of half open source, and so you can go out there and take it, and all of a sudden Google Maps is on your website, okay? And so they do this for airfare stuff too. And so comparing airfares and travels and flights, and it's better to just show you guys here, but pretty much what they're doing is they want to get into this space. They want to be the what's this? Well, I guess Travelocity or Expedia, right? They do travel stuff. So Google's going to try and take some of that market share, and they're going to cut off everyone from their API. And so Google actually does have this Google Flights, I think it's called here. Google Flights. Yeah, Google Flights. And so if you want to go from Toronto to China, I mean, let's just do a quick search here. Can I do a search here? Enter, hit enter. So from Toronto to China, it gives you some dates here from November 17th to 21st. You can explore destinations. Let's go to Shanghai. So that trip is $771 here, $120 a night for hotels. And so it gives you a nice breakdown here. I actually like this. This could be my, if I want to book a flight and hotel, I might be using Google next time. So Google's going to really try to get into that space, and maybe this will help Google's such a big company these days that whenever they branch out into something, it's not really going to help or hurt their bottom line too much in the next year or two. Maybe in the long term it will. We'll see what happens. I want to move on to Periscope. This is for all of you out there that want to become content creators here. So Periscope, they are upping payouts to broadcasters on sales of super art. So I didn't know that Periscope, I used to do Periscope for all of these videos, I think last year. When I would make all these things here, I would do a long 1-hour broadcast or 40-minute broadcast, and yeah, that's essentially what I would do. And they didn't pay people at that time, I don't think, here, but you can actually get paid to do live broadcasts now. So I don't really, I couldn't get an exact number here of how much, you know, an average Periscope person would make here, but it's really cool. All of a sudden, if you want to do stuff live, you're going to get paid for it too. So there's these things called super hearts. They're kind of like tips. They're kind of like tips. Like, it's similar to Twitch actually. So Twitch, you can get paid. You get donations essentially from the people that watch you. And so super hearts are the same thing. If people watch you, you can ask for a super heart, and all of a sudden you get paid $1 or $5 or whatever the number is. So it's kind of cool that Periscope's doing this. It's a way for also, the other thing too is that, you remember a couple of weeks ago, Twitter was talking about how they wanted to branch out into other revenue streams, and this seems to be one of them. This seems to be one of the ways where they can kind of maybe take a little bit of market share away from Twitch. Now, I know Twitch is largely a gaming platform, right? Twitch is largely gaming, not as much stuff from your phone. And Periscope's the opposite, right? So Periscope is, you're all filming it from your phone or occasionally your computer. If I think you can do it from your computer. I'm not quite sure, actually. You can't stream video games on it. So maybe Periscope branches out into that. I mean, that's a thought for Jack Dorsey, CEO, if you're listening to this. That could be a revenue for you guys. Maybe try to take a little bit of market share away from Twitch. I mean, you guys have the setup right now. You guys have the live streaming service. Just make it available on desktop and incorporate a system like OBS into it. I know that's 2 very big steps, but maybe that's a new revenue stream. Maybe, although, who owns Twitch, by the way? Does Google? No, Amazon owns Twitch. That's right. Okay, so Amazon owns Twitch. I forgot about that. I was going to say, like, or does Twitter own Twitch? No, it was Amazon. It's 100% Amazon. So, yeah, anyways, that's kind of cool for all of you content creators out there that want to kind of vlog your life or do videos like this. You can now make some extra money by doing live broadcasts. Now, it's only available to people that already have a big audience, so they're just kind of testing this out now with people who have, 3 million or more stars, or 185,000 stars a month you need to get this stuff. So, or you need, on average, 50 live viewers per broadcast. So, I mean, it can be, that's pretty tough. That's tougher than you guys would think. So, anyways, we're going to move on to the next topic here. Let's move on to Ford. Let's move on to Canvas. So, I didn't know about this. I just thought it was cool. We're not going to talk about this too long here, but what is that? Sorry, the lady in the car kind of looked like she had a mask on for some reason, but it's not. I didn't know this, but Ford has an app where it's essentially a monthly car subscription service. So you get to lease Ford cars on a month-to-month basis for about $400 to $500 a month, and I guess you get a new car every month or something like that, or you're not locked into a lease. Really cool idea for a lot of people that are just really into getting new cars every month or leasing cars on a short-term basis. I like this. I mean, if I'm staying at a place for a month, I might use this app. It's probably going to be cheaper in the long run versus renting a car for an entire month. I mean, I like this idea. Kind of cool. So we're going to move on to the next topic. Turnt. Last tech one. And then we're going to move on to some more businessy stuff here. So Turnt lets people pay you to party. So, you know, if you're in college, if you've been to college, university, or even if you're just a millennial, it's common for these days for people to want the party guests to pitch in. So if someone's hosting a party, maybe they're buying a bunch of food, you know, and the party costs $200. It's common for you to ask your guests to pay $5, $10, $15, $20, $50, whatever the number is, to pitch in, so that, you know, the host kind of makes some money for hosting the party, or at least, you know, everyone just kind of pitches in because that's a fair thing to do. And there's an app for you to do that now. And yes, you could do that through PayPal or cash, but now there's an app. It's called Turnt, and they're kind of grassrooting this thing. So they're going to colleges, getting people to sign up for this. So when people want to throw a party, people just log on to their app or their phone, pitch in $5, and the host gets the money. It's just really simple, kind of a cool idea. And I don't think this will be a big scale up kind of app, but, you know, if they could make several $100,000 a month or $1 million a month, I mean, that's really successful. So we're going to see what happens with that. This isn't like a big $1 billion company idea. It's a cool idea. Neat little thing. Let's talk about let's move on to business here. So Bill Ackman, I guess I call him Bill Ackman. His name's William Ackman. He exits year-long Herbalife short bet. Okay, so if you do not know this story, I'm going to give you the quick overview here. Herbalife. Herbalife is allegedly, well, they're an MLM, so they're a multi-level marketing company, but Bill Ackman, for the past 5 years or so, has been alleging that they are a pyramid scheme. And so why has he been alleging this? Well, there's actually a movie out. I believe it's called Bet on something. What's the Herbalife movie called? Herbalife movie. Betting on Zero. That's what it's called. So it's a really good movie. It's got 100% on Rotten Tomatoes. I don't think it's 100% good, but it was definitely a very good movie. So go check it out. And where's the article here? So Bill Ackman, pretty much he kind of made this. He was involved in this documentary, and he's pretty much been alleging that the Herbalife stock is going to fall dramatically because he thinks that they're actually a pyramid scheme. And so he thought that regulators were going to crack down and that the company would go bankrupt and go. He was betting on zero. That's what the movie's called. And so this is kind of a big story because he's changing his position, I guess. Let's see here. Wednesday's firm capped losses by recently closing out its shorts. So he's not shorting the company anymore. Instead, he's doing option puts, something along those lines. Put options. Put option puts. Put options on the company. And so he's kind of given up here. Now, what's really interesting here is that he's not really too wrong. I mean, Herbalife, if you don't know what a pyramid scheme is, pretty much means that the only way that you can make money is if you get other people to sign up in the promise that they can make money. And I mean, Herbalife, like 80% of the people that make money from this are very pyramid schemy. And so most of the company's revenue kind of comes from getting other people to sign up. And no, sorry, I should say the salesmen, the agents that sell the Herbalife product, most of the money that they make actually comes from getting other people to sell the product, getting people to sign up. So pay $10,000 to sign up and you get this amount of product to sell. And then that $10,000, half goes to Herbalife, half goes to the agent himself. And so it's a really interesting movie here, but I recommend you guys go check it out to kind of get a further explanation of this. But it was really interesting that he's given up on this because I think that Herbalife it's kind of schemy. It's not illegal because they do actually sell supplements that are actual lifestyle supplements here, but it's, most people that go into this think that they're going to make money from selling the product, and no, most people go in making money by getting other people, by selling other people on the idea that they can make money. And I really don't like those kinds of schemes here. As you guys, I've been talking about that recently too, with the people that like, I've made $1 million and here's how I did it. And then they just talk about mindset. All it takes is mindset, and that's all you have to do. And they kind of make the $1 million by saying that they've made a lot of money. That's kind of, I don't like that kind of stuff, right? I like people actually making and building stuff, putting out content, doing something legit. Anyways, let's move on to Tesla earnings. So Tesla's going to report their third quarter earnings, I believe, in a few hours. I think we're about 2 hours away from that, maybe even less than that. They're going to be on a conference call here, and so, we're going to see. They haven't really delivered a lot of their Model 3s here. Production, now, they haven't delivered a lot of their Model 3s. They've had a big miss by like 4. So they were expected to deliver 1,500 in September, and they only delivered like 100. And a large reason was allegedly because a handful of Tesla has a few suppliers for the parts of the cars, and a few of them just did not deliver on time. In fact, one of them actually got fired and is no longer a supplier for Tesla because they were so behind on all of the orders. And so we're going to see what happens with the stock. Probably they're going to probably miss on a lot of the earnings, on a lot of the revenue, and the stock's still probably going to go up because that's just what happens with Tesla, right? All right. And another point that this article made too here was that Tesla's burning through more cash than almost any other company out there. They're still not profitable. I believe they might be with their, they can't be with their batteries. I don't know. But they're burning through $1.2 billion in cash. That's what they did in the second quarter. They might burn through about $1.6 billion this quarter, and they're trying to raise some more money. They have $5 billion left in cash, and so they need to make some money quick. They need to scale up the Model 3 deliveries quick. They need to make that money quick, because if they cannot make large sums of money in the next year, we're going to be seeing them running out of money. Now I'm sure that there's some investor that's still willing to bet on Tesla, so I don't think that they're going to run out of money, but it's just interesting to see, like, they're burning through that much. That's their losses every month, every quarter. 1.2 billion. Let's do that perspective. I mean, so that's every 3 months you're burning. Every month you're burning through what? So every 3 months you're burning through 1.2 billion. So you're burning through 300 million a month plus 400 million, $500 million a month. Crazy numbers right there. I mean, per day, that's tens of millions. So yeah, that works out, right? Yeah, tens of millions, $10 to $20 million a day that they're burning through. Wow. That's crazy. Okay, let's move on to Virgin Voyages. Sorry, my voice is getting lost here. Virgin Voyages launching its adults-only cruise experience in 2020. Kind of cool. I mean, this is totally something Richard Branson would do. Looks like a really fancy... I mean, this is not your classical white, plain white cruise ship. This looks like a modern, really cool one that I would go on for sure. Not that I don't like cruises. I probably won't go on one ever, but I mean, if I were to go on one, I would pick this. So it will accommodate 2,700 passengers when it finally sets sail in 2020, but none of them will be kids. So what do you guys think of this? Would you guys go on something adults only cruises so there's no families, and I'm guessing there's alcohol everywhere? I mean, it'd be cool. I'd be interested in this. Let me know what you guys think. Let's move on here to some personal finance. Let's talk about how much you'd have to save per paycheck to retire by 50. And so this article kind of, now you can go onto NerdWallet and do a calculator with this, but this chart breaks it down here. So if you're making $40,000 and you start investing at age 22, you would need to put away about 34% of your paycheck every 2 weeks if you're an employee in order to retire with $1 million by 50. If you're making 60K, you have to put away about 23% of that. If you're making 100K, about 14%. If you're making 120K, about 11.5 to 12% it looks like there. So just some kind of crazy numbers. Now, that's for, I like my retirement strategy a little bit better here. Build up a company, invest on your own in real estate. Sure, you can put it in stocks too, but kind of build up a company that's big enough for you to retire on. If you want to retire. I don't really want to ever, but who knows what'll happen in 50 years. I don't know. But what do you guys think about this? Are you guys even capable of putting away 34% of your paycheck? You're making okay, look at perspective. Most of you watching this, statistically speaking, if you're a millennial, which is most of you guys, you're making somewhere between $23,000 and $32,000 a year, meaning that you'd have to put away more than half of your paycheck if you keep earning at that income level. Now, most of you, here's crazy. Most of your peak income will be about $50,000 personally. Household, it might be about $55,000, maybe $60,000. By the time you're 50, maybe even 70,000. But most of you listening to this, your peak personal income will be somewhere around $50,000 in your life. Crazy to think about. And although I guess if you guys are financially educating yourself and you're listening to this, again, it'll be higher. So you'll probably be making, peak maybe 70, 80. It'll be a lot higher than the average person because, one of the highest correlations between determining how wealthy you'll be in the future is how much information on finance and business you're willing to put into your head. And so I'm guessing if you guys listen to this, you guys will be fine. But yeah, kind of crazy to think about. Most people that make 40K are not even capable of putting away 5% of their paycheck. They're living literally paycheck to paycheck. So, it's kind of not a good sign of hope for anyone that's 40 years old out there and is making $40,000 a year and doesn't have enough to put away. And yeah, so anyways, but not everyone has dreams of becoming a millionaire anyway. I do, but is that really important to you guys? Do you guys have dreams of becoming a millionaire? Is that like your ideal thing, or are you listening for more of the entrepreneurship kind of aspect of this? Let me know in the comments down below. Like, Do you listen to me more for the finance stuff, more for the news stuff, or more for the entrepreneurship stuff? I'm really curious. So let me know down in the comments below. Let's move on here to, oh yeah, I was going to talk about Envision. So Envision didn't have a good day. They missed earnings by, I think they missed it by like 14%. They were expected to do somewhere around 83 cents a share, and they got like 70 cents a share, something like that. And they've dropped 31% today. So not if you are a day trader and you bet on them, you just lost 30% of your money. Kind of crazy. But let's see how they've been this year, actually. I'm always curious. They've had a bad year. They're down 59% this year in the past 365 days. And actually, sorry, they IPO'd in December. So I didn't know that. And they're a $5 billion company that just, wow, think about that. A $5 billion company that lost 31% of its value in one day. Billions of dollars just evaporated from the company. Let's move on to Facebook. So they're going to have their earnings reports here. I'll talk about this more tomorrow when they actually announce it. But Wall Street expects its revenue to climb 40% to $9.84 billion this quarter. Based on average estimate, that's the average estimate of Wall Street analysts who cover the stock. So per share earnings are seen to be $1.28 per share, up from $1.09 a share. Now, people saying why isn't this going to be higher? Well, it's because Facebook's actually one of those companies that likes to invest a lot of their money. They don't have several $100 billion sitting in some Cayman Islands. Now they probably have billions sitting somewhere, but they actually are investing a lot of money that they make. And that's why their profits may not be as high as they should be, but they're going to be way up. So we'll keep an eye on that tomorrow. Let's talk about Papa John's. Papa John's slams NFL leadership for lackluster pizza sales as shares sink more than 10%. So Papa John's sales down 10%. They blame the NFL because Papa John's is, they're a main sponsor of the NFL, right? And NFL viewership, I haven't talked about that at all. Actually, NFL viewership is way, way, way down this year. And I mean, to be honest, they lost me this year. I was an NFL casual viewer, like someone who'd watch, probably every other week I'd watch my team. And they lost me because, well, two things. One is because my San Diego Chargers moved to Los Angeles and I can't cheer for a Los Angeles team. I'll always like the Chargers, but I can't cheer for an LA team. Plus, no one's showing up at the stadium. But and the other reason was, if you go to the pre-games, a lot of the times it's, will the players kneel? I remember this kind of came to a heap when I was talking about people and they were before the game. Like I was thinking I only watched one game this year and it was just in the background. And people were talking more about, will they kneel? Will they protest the anthem more than like the game itself before it started? And that's, for me personally, I like to keep sports and politics separate. If I want to listen to politics, I go onto politics YouTube and I go onto Twitter and I go onto Reddit and look that stuff up. I like keeping sports separate because that's kind of a getaway for most people that watch it. Most people, they don't want to hear about someone kneeling during the anthem, right? And distractions that happen. Like they just want to see the game. I'm a big sports fan. I've watched NHL, NBA, MLB for years, and NFL. I don't know. NFL's my least favorite sports league, but I just want to watch the game. I just want to watch my team play, and I want to just watch some breakdown of the plays and a breakdown of the players and how well they're performing. I don't care about anything else of off the field stuff. Just report on the game. That's my opinion on it. Now, again, if you guys have been listening to me for a long time, I have no problem with the protests whatsoever. Like if you want to do it, I just don't care. I don't care about the protest. I just don't care about Trump tweeting out about all that stuff. I just don't care. I just want to watch sports. Okay. All right, let's move on here. Let's move on. Let's move on to the Papa John's thing here. So they announced that their sales are going to be way down because they are a major sponsor of the NFL and viewership is way down. And sales are only going to grow 1% versus 1.4%. What was expected here? Actually, is Papa John's... They're not public, are they? Are they a public company? They're a public company. I guess that's why they had to report this stuff. Oh, now I want pizza. They're down 8.9% today. Ouch. They're down on the year About 21%. That sucks. But I've never had Papa John's. They're not even in Canada, are they? I don't know. Let's move back here. So, yeah, Papa John's, not happy with the NFL. Let's move on here to last topic I want to talk about is something personal to myself and probably a lot of you watching this. If you want to be self-employed or if you want to start a business, people don't realize that the rules and regulations around getting a mortgage are very different for yourself, for a self-employed person versus an employee. In fact, banks and most typical lenders kind of discriminate against self-employed people and people that run a business. And it's a lot more difficult to get a mortgage for, I'm the truth. I'm an example of that, right? And I'm the worst example. I'm self-employed and I'm young. And so two things that they very much discriminate. Now I do make good money and I have good credit score too. But I mean, if you are going, here's what banks like to see when you are going to go get a mortgage. Here's what you like to see. They like to see that you have a contract, that you are an employee and you're under contract for at least a year, maybe 2 years, several years. They like to check to, make sure you're employed at a respectable company. And, if you're a business owner, the banks know this too. Like if you're just starting out too, there's a chance where you're not going to make any money that year. You might actually lose money, so you might not be able to pay your mortgage. And it's understandable, but it's difficult because for people that are doing well and are self-employed and are making decent profits and have been doing it for a year or more, or even a year and a half or 2 years even, it's still very difficult to get a mortgage. And I've experienced that. I'm going to have to probably wait another full year if I want to get a place, which is, that's really unfortunate. I want to buy a place because no matter how much money I make, I'm self-employed, so I'm still under the line of you haven't been doing this long enough. And the other thing too is like a lot of people that are self-employed, you don't just stick to one business. So if I were to go, think about this. Last year, if I were to go into a bank, I would have said, I'm a real estate agent. And then, 6 months ago, I would have said, I'm a YouTube online sales kind of person. And then maybe in 2, 3, 4, 5 months from now, I'm going to say, oh, I'm a founder of a startup. And when you keep changing, banks don't like that whatsoever. And so a lot of you out there, you might go from vlogging to selling stuff online to, building your own startup to jumping into real estate to trading stocks. And so every time you make one of those switches, the bank kind of knocks you down one peg. And so self-employed people are kind of turning to non-bank lenders. And I looked at this, actually. I did look at this. There are private lenders out there who would be willing to give me a mortgage. However, the rates are about 4 times higher for me right now. So I could go out there and get a mortgage from a private lender for 8% or 9% interest rate, maybe even 10%. But that's not worth it to me. Mortgages right now are going for 2 to 4%, even lower than that sometimes. So anyways, that's my opinion on all that. This is a long episode. I'm very sorry. I do have a cold too, so my apologies for the sore throat. I'd like to thank you very much for watching. You can check out my stock market or wealth accelerator in the link below. If you're interested in that stuff, go click on that. And thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.